It's not that the thing got better, it's that the money got worse.
Right.
So if you put money into Bitcoin today and the money keeps getting worse, then it's going to go up. And that's why I say all the time, one Bitcoin's one Bitcoin. Will always be one Bitcoin. It'll be that 2-bedroom house. But the average person today feels priced out of the housing market, but they can own Bitcoin.
Investors across the world are excited to see how the impending Bitcoin halving will affect the cryptocurrency market. There's a tangible feeling of excitement in the air as rumors fly over whether Bitcoin will rocket to new heights or undergo a huge drop. Renowned for his smart market analysis, Mark Yusko, CEO of Morgan Creek Capital, shares his thoughts on the post-halving environment. In this exclusive conversation, Yusko offers his thoughts on the possible course of Bitcoin, illuminating the variables that may affect its destiny. Will the next halving lead to a hype-driven quick rise, or are we about to see the last great Bitcoin run? Come along as we examine Yusko's insightful prediction and negotiate the complexities of Bitcoin's post-halving path. Stay tuned to the very end to gain priceless knowledge from one of the top experts in the field. So let's listen to his following words.
The 4-year cycle, I believe, is baked in because it's hard-coded around the halving. And the halving creates this impetus for price to rise. People FOMO in, and we get above fair value. Inevitably, an asset either stays at above fair value and grows into it. Now that's certainly possible. I don't think the cyclicality's gone. I don't think this is number go up in a straight line. I think we're going to have peaks and we're going to have troughs. And for a while, we're going to make higher highs and higher lows. That's called accumulation, right? So there's going to be an accumulation over the next year or so. Then when it gets too highly priced, there'll be distribution. The smart money, the people who bought early, or some of the whales, will start to distribute to the masses. And then when it falls, they buy back. It's happening right now, right? You can see it on certain days, right? Yeah. We gap down 10% right before the end of the day. Well, why? Well, ETFs can only trade for a very small window at the end of the day. They strike their NAV actually at 359 every day. And here's the crazy thing. All of the gains in the Bitcoin ETF occurred after hours. There's been zero price increase during the day from 9:30 to 4 every day for the last 3 months. No price increase. All of the price increase has occurred after hours. Well, why is that? Well, because again, if you have to buy a bunch of something, the oldest trick in the book, you don't actually start buying it. You actually sell it first. You actually might short it. You actually might spread rumors that it's a bad thing. So you can see this happening day in, day out. And I think that's going to continue to happen. And to your point, as the total asset base gets bigger, the ability for the big institutions to put big shorts on to push the price down so they can keep accumulating at a lower price. For the long term, that's okay, because what that does is it creates a more liquid market, a deeper market. Now, they're kind of stealing, the institutions are kind of stealing from the moms and pops who are trying to speculate, but speculating is hard. And I'm much more of a buy and hold kind of person. Like, if I like an asset, I want to own it. And then I'm going to own different assets in a portfolio on a diversified basis. And I'm going to rebalance on occasion. Trading is hard. Speculating is hard. So I try to, and trading's really hard when you're going up against people with superior knowledge and resources and tools. Like anyone trying to day trade stocks today, you're fighting Ken Griffin. There's no way you win, except on a very rare occasion like GameStop. But even then, it was a short-term win, because long-term, those guys are going to win.
Let's take a minute to examine another important feature of the present state of Bitcoin before delving more into Mark Yusko's thoughts. Steno's latest analysis indicates that the much-expected Bitcoin halving event, which is being eagerly anticipated by cryptocurrency traders worldwide, may conform to the well-known maxim, buy the rumor, sell the news. Comparing this to the 2016 halving, past data suggests that although the value of Bitcoin could rise in the run-up to the halving, it might fall below its pre-halving level in the first 90 days. The study draws attention to a noteworthy pattern that was seen during the 2016 halving, in which the price of Bitcoin stayed below its pre-halving level for the full 90 days after the event. This raises the possibility of similarities for the next halving, even with the predicted decrease in Bitcoin supply. Miners are anticipated to sell their Bitcoin after the halving in order to pay for their mining expenses, which might lead to sell-side pressure and possible price adjustments. The halving, according to analysts, may act as a bullish impetus for the price of Bitcoin once this initial period of adjustment passes and weaker players leave the market. Despite this, they remain optimistic. Furthermore, although some short-term volatility following the halving may be expected, the general positive attitude around the event may stimulate growth and interest in the larger Web3 ecosystem. Let's go back to Mark Yusko now and hear him discuss the forthcoming bull run that Bitcoin is expected to see and if this may be its last leap.
Is it the last big increase, like multiples? Kinda. And if you think about it, look, when it went from 0.003 cents to $1,
Yeah.
that was a miracle, right? That was the miracle of Bitcoin. That it survived like the startup phase, the science experiment. Getting to $1 was the miracle.
Right.
Then running from $1 to
birth.
$10, that's amazing. 10 times your money. But then it fell 80%. Then it went from $2 to 300. Oh my gosh, 150 times. And then it fell to like 186 or something. Then it went to 1,000. And then it went back down to 200. And then it went to 20,000. And then it went back to 3,000. So
Yep.
going from 1,000 to 20,000, just math, right? 20,000 20 times is a lot harder than 1,000 to 20,000.
Right.
And so from 68,000 to go up tenfold, I think it will happen, but it's going to take much longer.
It won't be in this. Yeah. Right. Right.
It's going to take much longer. And look, people ask all the time, well, what's the ultimate end game? Well, let's just think about this. Bitcoin today is digital gold. Now, Michael Saylor wants you to say it's digital property. Ultimately, I believe that, right? Okay, today, it's digital gold. What is gold? Gold is money. Money is an asset that exists in the absence of a liability. Total, and this is where people make a mistake. They say, well, total market cap of gold is 12 trillion. So the equity market cap, we're going up 10x from here. Half of that gold doesn't count. It's jewelry and chalices and gold leaf on the Golden Dome, back there at Notre Dame. So no. So 6 trillion, that's 5x from here in the bank. Making 5 times your money from here in the bank. You can call me on it. Okay? So that's like 400K. Easy. I mean, like super easy. Fine. Okay, but then beyond that, digital property. Now, digital property, real estate is about an $86 trillion global asset class. Is it possible that Bitcoin is a better form of property? Like, think about it. The American dream post-World War II was what? Everybody buys a house, white picket fence, we take a mortgage, and we, make a ton of money. You bought a place in California when you came back from the war for $5,000. It's millions of dollars today. Glorious. Okay, what is that? That's just currency devaluation. It's not that the thing got better, it's that the money got worse.
Right.
So if you put money into Bitcoin today and the money keeps getting worse, then it's going to go up. And that's why I say all the time, one Bitcoin's one Bitcoin. Will always be one Bitcoin. It'll be that 2-bedroom house. But the average person today feels priced out of the housing market, but they can own Bitcoin.
Mark Yusko offers an intriguing analysis of Bitcoin's history, comparing its price fluctuations to different phases of the project's development. He considers the rise of Bitcoin from its lowly origins to $1, which he refers to as the miracle period of the cryptocurrency's history. According to Yusko, this stage symbolized Bitcoin's perseverance during its experimental and beginning phases. Yusko goes on to highlight other notable moments in the history of Bitcoin's price, such its astounding rise from $1 to $10, and the ensuing large declines. He highlights the exponential expansion that was seen throughout these times, using the startling 150-fold increase from $2 to $300 as an example. Yusko also addresses Bitcoin's rise to greater price points, pointing out the difficulties in attaining such significant rises. He says that, for example, making the leap from $1,000 to $20,000 is intrinsically harder than making similar gains in value before. Yusko is optimistic about the future of Bitcoin, even if he believes it will expand more slowly. He compares Bitcoin to an asset that exists independently of obligations and feels that its development into a digital equivalent of gold is consistent with its current state. Yusko then explores the idea of Bitcoin as digital property and makes analogies to conventional real estate. He thinks that because of its limited quantity and ability to withstand currency depreciation, Bitcoin may prove to be a better type of property. This idea is a reflection of his conviction that as existing currencies lose value over time, Bitcoin's value will increase. Yusko's explanation at the end of the video offers an insightful viewpoint on Bitcoin's potential as a long-term investment. He thinks that having Bitcoin might provide a safe haven of wealth in an uncertain economic climate, similar to owning a two-bedroom house. This comparison supports his more general claim that Bitcoin offers a competitive option to conventional assets like real estate, particularly for people who feel priced out of traditional markets. Until next time, happy investing.